Okay. That's great. You're just about starting the session, right? Okay. So I can see some people online right now. If you can hear um, and if you can see me now, you can just let me know that you can hear and see me clearly. Right. So I'm sharing my screen now. All right. Okay. So I can see some people joining. Just type in the chat section that you can hear and see me clearly, and we can just get started. And so, in the middle of the session, if you don't understand anything or you want to ask a question, you can just let me know, and I'm going to give you the chance for you to ask the question. All right. So Solomon said, "All clear." All clear means you can hear and see me clearly. So I think I can just get started with the session. All right. So the people who are joining us live from YouTube, let us know that everything is clear over there and you can see and hear us very clearly. Okay. So I'm sharing my screen as of now on YouTube too. And if you are joining us from YouTube, let us know that it's all clear from your end and you can see and hear us clear over YouTube too. Yes. Right. So I think we are set now. We are having. All right. So Amakwan, you can't hear and see me clearly. What's the problem? What's the problem from your end? Why can't you see and hear me clearly? Let me know that. Let me know the issue that's going on with you. Okay, so in just a minute or so, we are just going to get started. For now, we can just have an intro, know ourselves, and I mean have a little chit chat before we start this session. Okay, so I'm in Ghana as I speak. All right, I'm in Ghana as I speak, and let me know. I know there are a lot of people who are joining us online who are from other countries. We have Nigerian online, we have Kenyan, we have Ethiopian, and we have a lot of African countries who are joining us today. So let us know what's going on in your country in terms of the economy. Okay, so in Ghana right now, our restrictions are eased at the moment, and people can travel from one region to the other region. And I mean, people can also travel into the country, but they're just going to run some coronavirus tests, which they are going to pay for themselves, right? So let us know what's going on in your country, and we can just get started. So last 2 weeks, I went out how to make profits during this coronavirus season. Okay, so today we are going to talk about how to read some popular forex codes, or how to read forex codes. As a forex trader, you should know how to read forex codes. It's a must. You just have to know how to read forex codes, else you aren't a trader, right? So if you are watching the news, whether it's the Bloomberg news, whether it's CNN or whatever it is, and you are seeing currency pairs and you can't read them, then I mean, what shows you are a trader, or what shows you deal in FX, right? So today we are here to learn about how to read some forex codes so that when we see them we can understand and we can utilize them best in our trading, right? So I see more people joining. um, you can let me know whether you can see and hear me clearly, and also um, ask questions. Feel free to ask questions, since I want this session to be very interactive. And at the end of this session, I want everyone to, have something new before he or she leaves this session. Okay, so right now on my screen, I'm displaying a chat. I hope you can see that. So let's go into our presentation. So this webinar is being hosted, or is being sponsored by M Trading. M Trading is a forex broker, right? It's a forex broker that is giving out 200% bonus to its customers. So if you register, or if you sign up to M Trading, they are going to give you 200% on your first deposits, okay? So that you can trade with it and make some profits as well. All right, now let's get into the topic for the day, and it is how to read a forex code. How to read a forex code. So right here, you can see we have GBP USD, GBP USD, and you can see the GBP USD is 1.51258. I hope you can see this right here, right? So anytime you are trading forex, you are dealing with two currencies, all right? You can't just trade forex dealing with only one currency. Anytime you are trading forex, you are dealing with two currencies, and for the two currencies, one starts and slash the other currency, okay? So in this scenario, you can see GBP USD, GBP slash USD. This means that the GBP means it's the base currency, okay? That's a base currency. So the one that comes first is called the base currency, and slash the next one is called the quote currency, right? Other people call it the counter currency. So GBP USD, we have the base currency and we have the code or the counter currency. So if you see a chart like this is also a GBP. Someone is going to ask, is the GBP going up, or is the dollar going up, right? So in this session, after we are done, you're going to understand how to read the forex charts and see whether it's the GBP that's going up or is the dollar that is going up in this chart. Let's have a look at YouTube, and let's see how people are reacting on YouTube. Well, people who are on YouTube, you can just type something in the chat section. As time goes on, I'm going to review your questions, and I'm going to also answer you from reading the chat or the comments in the YouTube section. Okay, all right. So when you see a currency pair like this, that's the GPUSD. The first one is always called the base currency, and the second one is called the counter currency. Now, let's go into a chart, since I like to do more practical more than the theoretical aspects. I like more practicals more than the theory. Okay, now looking at our chart here, okay, you can see that we have a little bit uptrend over here, right? Last week we talked about trend, uptrend, downtrend, and sideways trend. We also talked about channels and how to read some popular charts. So this week we're going to talk about how to read the codes instead. Now, if you see a chart like this, let me just zoom in and make it big so that you can see it very well. Okay, so every green candlestick you see here means a bullish candlestick, right? Yeah, last week we talked about bullish and bearish. So a bullish candlestick means that the price was going up, right? Or that session, right? That period of time, there were a lot of people who were placing buy trades. So the candlestick pushed up. Now let's go to the daily charts. Let's work with the daily charts today. All right. Okay, this we are on the daily charts, and okay, so this is the daily charts. Now we can see a red candlestick here. That's also called a bearish candlestick, right? And we are on the daily charts. We are on the daily charts means that every single candlestick you see right here represents one day. So it's the movements within a day. Okay, so at 9 p.m., right? 9 p.m. the candlestick started, and now it's pushed up a little bit to this area. You can see it has a wick here. Now it's reversed and came down towards a downwards direction. So the entire day, right? The currency pair lost its momentum and came towards a downwards direction. That's called a bearish candlestick. So if a candlestick goes down, it's a bearish candlestick, and if it goes up, it's a bullish candlestick. And when you're reading forex codes, it means that the base currency, that's the British pounds, right? The base currency lost momentum. Okay, the dollar gained energy or momentum over the pounds. That's why it came down. Okay, and on this candlestick, on this bullish green candlestick, it means that now after the GBP lost or the pounds lost its momentum and came down the next day, that's the 7th October, it pushed up again. Now the GBP has gained energy or momentum over the dollar and has pushed up. And today is the 8th of October, and today's candlestick is also a bullish candlestick. That means it has been a bullish continuation for 2 days. So yesterday the pounds was bullish over the dollar, and today too it has been bullish over the dollar. And yes, last week we were talking about the wicks, WICK. It's called the wick. So the wick is the small pins that you see on top and at the bottom of the candlestick. All what the wick is trying to tell you is that the price has been to that point before, right? So it's leaving a footprint, or it's leaving its shadow there, showing you that I've been there before, but I couldn't hold my momentum. So I've reversed or I've pulled back a little. And you can see another wick down here. It means it has become bearish today, right? But it couldn't hold to continue its bearish movement, and it's pushed back again to this point. So now this is the current price of the GBP USD. And guys, if you are wondering the platform we are using for this illustration now, we are using the trading view platform. So a trading view platform is just a universal platform that all traders can hop onto, select their pairs they want to do their analysis with, and they can do analysis on this platform. They have a lot of tools that you can use, and it's easy to use as well. So at your free time or at your spare time, you can just check it out, tradingview.com. They also have an app on the Play Store and the Apple Store, and you can also use it on your phone as well. Well, M Trading also have the MT4 web application. So if you log on to M Trading, you're going to download their MetaTrader 4 web version and can also use that for your analysis. But in this webinar, I'm going to use the TradingView platform to do most of my illustrations, right? So guys, I said as time goes on, if there's anything you want me to go over or you don't understand, I'm more than willing to go over and explain it for you to understand it better. I know some people online are not beginners; they are intermediate and some are advanced traders. But for the sake of the fresh people who are joining this webinar, I would like to take this from scratch so that everyone can understand the subject matter we are talking about today very well. And if even you are an advanced trader, I think most of the things I'm going to talk about can also help you, or give you a good edge on the forex markets as well. Let's go to YouTube and see if we have any questions. Okay, we don't have any questions on YouTube, so we can continue with our session. And also on Zoom too, we have no questions, so we can continue with our session as well. Now, so guys, I hope by now you understand what a base currency and a quote or a counter currency is, right? So if the chart is going up, it means the base currency is gaining momentum over the counter currency. And if it's coming down, it means the counter currency is gaining momentum over the base currency. So simple put, that's how we're going to say it. So here we have long and short. So guys, in my strategy, how I trade during this coronavirus session, we talked about shorting, right? Shorting is whereby you make profit or you take advantage over the falling prices of the forex markets, right? So if we say shorting in the market, it means the price is going down, right? And if you say the market is going long, it means the price is going towards the upwards direction. I hope this is going to be pretty clear and it's going to be simple to understand. So we have long and we have short. Very simple. Well, guys, most of you have been wondering, how do forex brokers make their money? Okay, how do forex brokers make their money? And people have been saying is with commissions. People have been saying it's with spread and stuff, right? Well, there is something called a spread. And most of the time, I like to tell my students or I like to advise. Well, I can't impose anything on your trading style, but I would like to just advise you. And if you find what I'm saying, sensible enough, you can try. Some of my strategies and what I've learned in the market so far. Well, in my period or in my beginner period of learning how to trade forex, I just take any currency pair and I start trading with it. I didn't really look into whether it was an exotic currency pair, a minor pair, or a major pair. I just take the currency pair, I look into the technicals, I put on some indicators and I start trading, thinking I could make some profit with it, and most of the time it was losses. That was because I didn't understand the class of currency I was trading. We have what is called the major currency pair, we have what is called the minor currency pair, and we have what is called the exotic currency pair. So most of the time, the exotic currency pairs are currencies that are from developing countries like Mexico, South Africa, and stuff. They are the exotic currency pairs, and most of the time they can be expensive when you choose is to trade with, because the swap are very high. Okay, and if you are trading with a very high swap, that means your account is already being eaten by the swap, sorry, by the spread. Okay, so that means your account balance is already being eaten by the spread or the commissions the broker is going to take. So you see that for exotic currency pairs, their spread are very high. And when it comes to minor currency pairs, they are almost they are intermediate. And when it comes to the major currency pairs, you can see they have low spreads. So the major currency pairs, we could have something like the GBP USD, we can have like the USD JPY, and we can have like the Euro USD. Okay, those are some of the major currency pairs. And when you are using your broker, you can see that their spreads are low because they are major currency pairs. And I mean, that's how the brokers have set their system to be. Okay, so if you've been wondering how forex brokers have been making their money, they make money on the spread, right? They take spread fee to, make their money. And why forex brokers? Why do you have to sign up to a forex broker to be able to trade in the forex market? Why? Well, in the 70s, and I mean in the late days, you couldn't just sit at the comfort of your home and just take your phone, your tablet, and whatever it is, and start placing trades. You have to take your money and you have to take your bets, right, to the exchange or the big banks and tell them, well, I think gold, based on my analysis, gold is going to go up in the next couple of days. So I'm placing a bet on gold. Then they take your money, they place a bet for you. Later, you come and see whether you've made profit or you've lost your money. But now things are advancing, right? We are in the advanced world now, and now forex brokers has come into the picture, so they are serving as the middleman. So if for you to take your money and go to the bank or the exchanges, they are serving as the middleman. So you give your money to the forex brokers, and now they can place trade. Or I mean, if you give your prediction, they can execute it with the exchanges for you, for things to be very easy. Okay, so they have to, I mean, also get paid. So they also make their money from the spread. All right. So that's it for spread. If you've been wondering how forex brokers are make their money, and if you've been wondering how, if you place a trade immediately when you enter a trade, you'll be in the loss, right? That means that there's been a spread fee deducted from your equity or from your balance. You understand? So that's it for the spread. Now let's go to swap. Swap. So most of the day traders, if you've been joining my previous webinars, I've been talking about what personality of trader are you? Are you a scalper? Are you a day trader? Are you a swing trader? Are you a position trader? I've been talking about all these personalities of traders. Now, for day traders, most of the time I do day trading. So for traders, you see that um, when most people place trade, when it's getting to 8 or 9 p.m., they are just in a rush to close their trades because they are afraid they are going to be charged a swap fee, right? So the swap fee is also an amount of money or a fee that you pay to the brokers for you to be able to swap or roll over your trade overnight, right? And I've been saying most of the time for the forex brokers, they've set their service to 9 o'clock p.m. So immediately it's 9 o'clock p.m. They enter the next day. So for us, when we go and sleep, we think when it's 12 midnight, it is and we've entered the next day. But for the forex brokers, immediately it's 9 p.m. Their service resets onto the next day. So if you've been trading a lot, you see that immediately it's 9 and the daily candlestick closes and another candlestick opens for the next day. So immediately it's 9, you're going to be charged a swap fee. And sometimes you can gain a swap fee, right? You are not always being charged a swap fee. Sometimes, if it depends on the interest rates of the currency pair you are trading on. If you happen to have, I mean, a favorable interest rate on the currency you are trading on, immediately it's 9 p.m., you are going to be awarded a swap fee, right? That's going to be an interest or on the trade you are placing. And if you are unfortunate, you are going to be charged a swap fee from your balance or from the profit or losses you are making. Okay, so guys, the session is still ongoing. If you have any questions, you can still ask them, and I'll be willing to answer your questions as well. Let's go back to YouTube and see whether we have any questions. Still, we don't have any questions from YouTube, so I think we can just get going. We can continue with um, what we are talking about. So, guys, I'm sure by now you understand the concept of swap fees, right? So, if you are trading and there is a swap fee deducted from your account, you shouldn't be worried and you shouldn't think that the brokers are stealing your money. It's something, that happens, and you have to be, read into the currency classification before you choose a currency pair to trade with. And if you think you're going to be charged a swap fee, then and you're day trading, then you can just close your trade. But if you are a swing trader, swing traders are used to swap fees because anytime they roll over their trades, they are charged a swap fee and they are okay with it. Still, they make profit, or if they are not good enough, they still make losses, right? Okay, so we've talked about swap, and um, we've also talked about spread as well. Okay, okay. So now let's talk about what pips is. Pips. So you've been hearing pips here and there. Pips is the percentage in what is point in percentage, point in percentage. So that's the full meaning of pip. Okay, it's point in percentage. And most of the time, if you join Forex Telegram channels that they give signals, you've been seeing, hey, I had 20 pips. I lost 100 pips. You've been hearing pips, pips, pips. And in Forex trading, we deal with pips, right? So you have to know how to calculate pips when it comes to Forex trading. And I have a video on my YouTube channel talking about how to calculate pips. So if you have some time, you can just look into our videos and you look for the educational video that talks about how to calculate Forex pips. But still, in this session, we are going to calculate a very simple, we're going to do a very simple calculation of pips. Okay, so we have something called the pipette, and most traders haven't heard of this word before, called the pipette. Okay, so what is a pipette? What is a pipette, guys? So let's take a currency pair like the Euro USD. The Euro USD. Guys, I want everyone to understand this concept very well. That's why I'm taking my time. And if by any chance you don't understand what I'm talking about, you can just ask a question and I'll be willing to answer your question for you nicely. So we are dealing with the Euro USD. The Euro USD, that's a EUR USD, is also a major currency pair. So if you are wondering what class of currency pair it is, it's a major currency pair. We are working with the Euro USD. So let's say, let's take this. I hope you can follow my mouse pointer. Let's take the current price of the Euro USD to be, let me see where I have a pen and paper here. No. Okay, let's take the currency, the current price of the Euro USD to be 1.15382. If you have a pen and a paper, you can also write this down and try to do this calculation. Okay, so the current price of the Euro USD is 1.15382. All right. So you see, after the decimal point, there are 5 digits, or there are 5 numbers followed by the after there is a point. Okay, so if there are 5 digits following the point, then it means you have to discard or you have to ignore the last one. That makes it the fifth. So that one is called the pipettes. Okay, the last one is called the pipettes. And if we are calculating pips, we ignore the pipettes because it's so small and it can't be used in calculating our pips. So the two you see at the end here, we are going to discard or we are going to ignore it in our calculation of the pips. So just remove the 2 from the equation. You can just cancel the 2. If you've written it now, you can cancel the 2. and it will be left with 1.1538. All right. Okay. So the current price is 1.1538, and we are saying that. Let me also use my calculator in this calculation so that I see whether you've answered right or you've answered wrongly. Okay, so 1.1538, right? And we are saying that we've made 100 pips. We've made 100 pips on our trade. Okay, we've made 100 pips. That means it has moved 100 points in percentage. All right. So if we have this current price and we have or we have made 100 pips now, then how much? What is the current price now? Okay. If we've made 100 pips on this price, then what is our current price now? So that's a question. That's a question. So you can just answer the question in the chat section. Okay, you can just type your answer in the chat section. So we have this current price to be 1.1538, and we are saying we've gained 100 pips on our trade. So what should be the current price now? Okay, so I'm waiting for your answers on YouTube, on Zoom. I'm waiting for your answers. Let the answers flow now, guys. Let's know how many we've made 100 pips. What's the current price now? What is the current price now? If we've made 100 pips of on our trade, let us know now. Um, so people on YouTube, I haven't had any question or I haven't had any answer yet. And the people on Zoom too, let me see your answers coming right now. He said we've made 100 pips. Okay, we've made 100 pips on 1.1538. So what is the current price now? So I'm going to give 20 seconds for you to put in your answers. If we haven't still had an answer, I'm just going to tell you the answer and continue the session. Okay. Okay. All right, guys. All right. So now, so no answers yet. So if we are making 100 pips, if we are making 100 pips on 1.1538, that means the current price should be 1.1638. Okay, because we just added 100 to the price we have here, ignoring the 2 at the end. Okay, so in our calculation, we're not going to add the 2 in our calculation. Okay, we're just going to add the 100 to what we have over here. Guys, I hope this is clear. Let me know if you still don't get a concept of calculating pips right now. Okay. Okay, so we can take another example, taking our current price to be 1.1051. Okay, there's another example, 1.1051. Okay, and we are saying that we've lost. We are saying we've lost 50 pips. We are saying we've lost 50 pips. What should be the current price at that moment if we lose 50 pips on 1.1051? If we lose 50 pips, what is going to be our price? What is going to be the price now? Right? So for that one too, without wasting much time, I'm just going to give you the answer to that too. So the current price should be 1.1001 if we've lost 50 pips. Okay, so deducting 50 from what we have here, you have 1.1001. So that's how simple we can calculate our pips when it comes to forex trading. So we can't talk about pips leaving out what lot size is. If you're talking about pips, we have to also talk about what is a lot size. Lot size. Okay. So when most new traders start trading, they just, I mean, choose any lot size and be trading with. And most of the time, I tell my students that you should start from the low lot size, right? Like the micro lots. Then you can advance to the mini lots, and you can go to the standard lots, because the goal is that you want to trade for your entire life, for, I mean, 20 years, 50 years, or even 70 years, 100 years. I know some people are going to be about 80 and 120 years before they die. So the goal is to trade for the rest of your life and make profits consistently or gradually. Okay, you don't have to rush for any quick gains within, I mean, weeks or some days. Okay, so you just have to take your time, master the use of your strategy, your indicators, and, I mean, make profits steadily. That's important, because 90% of retail traders, they lose 90% of their deposits in 90 days, and you don't want to be one of those people. Okay, so it's important for you to make profits steadily and use lower pips when you start trading, and now you can advance to the higher pips. So the lower pip we have here is the micro lots. Okay, but for some platforms, they have what is called the nano pips. Okay, they have what is called the nano pips. So for the nano pips, they are so small to the extent that, I mean, most platforms do not include them in their lot selection, right? They have just these three main pips. That's the micro lot, the mini lot, and the standard lot. So from what I just said, you can see the standard lot is the biggest lot size you can trade during this session. So if you are a beginner trader, a intermediate trader, or an advanced trader, um, you should definitely see what lot size is. So when you open your MT4 application, you should see lot size, right? And you can just, I mean, edit the lot size, or you can just change the lot size you want to trade with, and you can just place your trade on the. So when you see lot sizes, you see that the smallest lot size in the MT4 app is 0.01. That's the smallest lot size you can trade with. And if you don't have a big balance, or you have a small account, you shouldn't mess with the mini lot size and the standard lot size. You just stay in the micro lot size, because if you choose a higher lot size, you're going to place a big bet, or, I mean, you're going to enter into the market big and lose your money very fast if you don't know what you are doing. All right. So the smallest one is the micro lots. So the micro lots, we have 0.01. So 0.01 all the way up to 0.09 is called the micro lots. All right. And when we talk about the mini lots, we have 0.10, 0.10 all the way up to 0.99. Okay. That is called the mini lot. And we have the standard lot. Standard lot 1 point whatever 5.26. From standard lots, you can just fill in, I mean, all the spaces with, I mean, what you want to trade with. Okay, so micro lots start from 0.01 to 0.09. And if you make a pip, if you are using one micro lot, okay, and you make one pip, that means you are going to get 1 cent, 1 cent, one US cent. And if you are using a micro lot, and you're using one micro lot is equal to 0.10. That's what we can see here. If you make one pip on using a micro lot, you are going to make $1, $1. Okay. And if you are using a standard lot, and you are using one standard lot, that's 1.00, you're going to make $10 on every pip you make. So if your prediction is right, you're going to make one pip, $1, sorry, $10 on every pip. And if your prediction is wrong, you're going to lose $10 on every wrong pip. I mean, your trade goes right. So if we are using the standard lots. Let's just take the standard lots for an example. Okay, if you are using a standard lot and we make fives, if you are using one standard lot in the trade and we make, that means we've made $50 because every pip represents $10. And if you make five pips, we've made $50. Okay, in the same way, if we make minus 50 pips, we lose. Sorry, we make minus 5 pips, we lose $50. Okay, so if you make $50, you can also lose $50 if the prediction goes to the wrong direction. Okay, so that's how forex trading works, guys. Most of the time when I'm teaching my forex course, I like to talk about take profit and stop loss. Take profit and stop loss. So I'm talking them to M trading, and I'm sure they're going to give me the opportunity to, connect my phone to my laptop so that in our subsequent meetings we can, you can see how I place my trades, how I use my MetaTrader 4, and some tricks and techniques and some hidden features in the MT4 that I use, and it really helps me to, make good profits in the market. Okay, so I'm going to in my subsequent meetings, I'm going to talk to M Trading, and when they give me the opportunity, then I'm just going to connect my phone to the laptop, and you can see how I place live trades. You can see how I put indicators on my phone MT4 application, how I put, how I take partial profits, partial losses, and how I put in pending orders and stuff, right? So there are a lot of features in the MT4 that I'm going to show you in our subsequent meeting, how to put on take profit and stop loss, and a lot of stuff when we are using our phone to place live trades. Okay, now we have what is called the take profit and stop loss. Guys, I also have a video on take profit and stop loss in my YouTube channel. Okay, so you can just also look into my videos and you see a video on take profit and stop loss. So for the take profits, in my prep days of forex trading, when I place a trade in the morning and it's going towards the good direction or the bad direction, I can be glued in front of my screen the whole day watching my trade, so that if I I just close my trade. And if I'm losing too, I'm just glued in front of my screen, so that immediately, I make profit, I can close my trade. Or if I'm losing too much, I can just close my losses, right? But I saw that, as time went on, I saw that, I was just wasting my time, and I didn't really know what I was doing. And that's where I discovered the use of take profit and stop loss, right? So, in the morning, I just play straight, and even I don't go and take my bath because I'm watching my trades. I don't want to lose guard. I don't want to go out. Even going to get food to eat was a problem because I was just glued onto my trading screen. And now when I had the opportunity to practice how to use take profit and stop loss. My trading style got eased a lot. And if with take profit and stop loss is also a good way of risk management, guys. It's a good way for risk management. So as a good trader, right, before you enter into a trade, you have to plan, right? Planning is very necessary. In our next two webinars, we are going to talk about how to plan your trades. Okay, I think last 3 weeks or so we talked about that, how to plan your trades, and next 2 weeks we're going to talk about how to plan your trades before you even enter into the market. And even on my YouTube channel, I also have a video talking about trading and gambling, the difference, right? And I also talk about a little planning in that video. You can also check that video on my YouTube channel. I think that's the current video we have on our channel, right? Before you even enter into the market, to be sure you're not gambling, you should know what your take is, and you should know what your stop loss is, right? So you should identify where there's going to be resistance or support and you want to take your profits, and you should identify where there is resistance and support that you want to cut your losses. Okay, so take profit and stop loss should be very necessary and should be very important when you are placing your trade. I'm a very aggressive trader, I have to admit to that. Most of the time, I don't use take profit and stop loss. Most of the time, when I place trade and it's going towards a bad direction, or I'm losing money, I just say it's do or die, man. It's do or die. So I mean, when I lose like a man, and when I make profit, I also, I mean, I'm a hero. But I realized I was doing the wrong thing, and most of the time I was losing money. But when I had opportunity to master the use of take profit and stop loss and how to strategically place my take profit and stop loss, I realized, I mean, I was improving my style, or I was improving my profits I made in the market. So, guys, in one of our webinars, we are going to set time aside to talk about, I mean, how to use indicators and how to enter the markets at the right time. Okay, how to enter the markets at the right time and make some profits. Okay, so Solomon is asking a question, and he said we should find time to talk about sessions, right? And how to trade with trading sessions. Guys, I also have a video. I have a video. I don't know whether I've uploaded it on YouTube, talking about trading sessions, okay? We're talking about the Asian session, the American session, we talk about the sessions, okay? So guys, I don't know if I've uploaded it. If I haven't uploaded that video, I think I'm going to upload it today or tomorrow. But you can just still check on my YouTube channel and see whether we have video on market sessions, because I really, I mean, explained market sessions. And I'll also make sure Solomon, in one of our trading sessions, we talk about market sessions and how to trade them. Most of the time I trade in the lending session, okay? I trade the lending session, and lending session, because our time and the time in lending are most of the time they are the same, right? Right now it's 9 o'clock, and in London I'm sure it's 9 o'clock by PM over there. So because our time syncs together, I mostly trade on the lending session. People who stay midlines can trade the Asian session and stuff. But to be able not to worry myself, I like to trade in the lending session, and sometimes I trade in the market overlaps. That's where there's a lot of volatility, and you can also make some profits. So it's noted, right? It's noted. We are also going to, I mean, prepare a webinar about that, and we talk about market sessions as well. All right. So, guys, at this point in time, it's 9. If you have any question, any suggestions, you can just ask them now. Um, for us to answer your question for you now. Okay, so now, guys, I would like to tell you about my. I know already people are joining, or people are subscribed to my YouTube channel. I would like you to also tell a friend to subscribe to my channel, okay? Subscribe to my channel for new videos, new forex trading videos, and then that can improve your trading styles, your trading skills. And I also share my experience in the forex market, what I mean has happened to me, and I wouldn't want to happen to anyone who, I mean, follows me, or anyone in the market. I've had pretty bad experiences in the forex market. That's why I share most of this knowledge on my YouTube channel. You have to join, subscribe, and also make some profits, um, or I mean, increase or speed up your learning skill in the forex market. Guys, I'm still taking questions from YouTube and from Zoom. So if there is any question, you can just ask now, and I'll get them answered for you. All right, so I'll give 10 seconds for that. If you have any questions, let me know, and we can end our webinar now. Guys, every Thursday we have a webinar, so be sure to join our Telegram channel as well, where we are also going to post the link for the webinar, so that you can always register on time and join the webinar every Thursday. Okay, so every Thursday there's something new you're going to learn. If even you've taken the webinar before or the topic before, you should still join because every day we add new stuff. There's something you're going to hear that is going to have a good impact on your forex trading style. Okay, okay, guys. Without wasting much time, I would like to thank everyone for joining this meeting, and I hope it was very informational and it was very impactful, and it's going to have a good and a huge impact on your trade. And I'll be very happy to be part of your success in the forex market or in the trading world, guys. If there's any questions you would like to ask offline, you can also send us a message on Telegram on Bank Lifestyle. Okay, and can also join our Telegram group as well. And guys, please remember to subscribe to M Trading Africa, M Trading Africa YouTube channel, where every week we post the global market recap, and it can be a very good source for your fundamental analysis. Okay, and also subscribe to my YouTube channel as well, and also share my channel, right? Share my channel, and let's be, the biggest forex trading channel in Africa, and if possible the world. Guys, thanks for joining. I really appreciate your time, and same time we're going to meet next week. Bye.